All right, so here we are again, finding ourselves looking at silver. Let's look at silver through the lens of Elliott wave theory and try to discern, when is this thing going to bottom, or is the bottom going to drop out of the thing? Let's take a look at some parameters. Here we go. All right, so the market is now closed. We did get a break of this trend line. I'm viewing this as a diagonal, an Elliott wave diagonal in wave 4 position with a series of overlapping waves that there are different rules depending on who you listen to. I try to follow the Bible, the Bob Prechter Elliott Wave Principle book, and in there he talks about the 5-wave triangle. This does meet the requirements as such, and then we did get this breakdown today with a bit of a bounce and now retraced down. So obviously pressure is down. This is broken out of the triangle to the downside, and to me, I'd put this clue on there. This is a parameter. If this is going to go lower somewhere down in this region, it should not come back above $26,935, $26.93. And now what I'm going to do is drill down on some of the nano stuff. This is a great reminder right here. Just like with candles, when you're dealing with the nano counts in Elliott wave, they are less and less reliable. The smaller degree you get to, price can just do anything it wants at those levels. So you want to stay at a level where the structure is clear to you. So in this case, I'm looking at this structure at this degree with one in white, 1, 2, this is wave 3 in white, and then this is a wave 4 triangle. This is the white wave 4. And then now I believe we are in wave 5. We have broken out of the triangle to the downside, and the pressure remains down. So these white fibs here go along with these white labels for the white wave 3 to have just exceeded the 1618. The wave 4 triangle is contained where you would want it to be contained, which there's 3 things I look out for a wave 4. One is it going to stay out of the price territory of the wave 1? Yes. The price, just in case you're on a phone and you can't really see this stuff, this red line here across the top at $28.06 remains our upside boundary. Call it the ceiling. It happens to be the downside lowest point of wave 1. So parameter number 1 is wave 4 encroaching in the price territory of wave 1? The answer is no. So this is still a valid wave 4. The second parameter I like to use is measure from the bottom of wave 3 up. And actually, I'm pulling the points for this measurement in blue here. The top side of that measurement is the top of wave 2. So basically what I'm doing is measuring the retrace of the entire length of wave 3. And the second parameter is I like to see price hold between the 236 all the way up to the 50% level for wave 4. Now this price did come all the way very near the 50% level, very far away from the price wave of 1, but it got rejected there and it came down in a 3-wave corrective move. So that's the second parameter, is did wave 4 hold within my blue fibs? And the answer is yes. So far it's held 2 requirements. And the third requirement is the actual structure of price. If it is a wave 4, it is going to be overlapping and corrective looking. And to me, this is clearly overlapping, clearly corrective looking. In fact, it's playing out as a triangle. In fact, it's done. It did the triangle A, B, C, D, E. And it came down. You could view this as a couple of different things. Now for fun, because for me, this is fun. The overall parameter for wave 5 is somewhere down here in these white fibs, starting with this one at 2622. I view that as a reasonable area. If this wants to come down in here, bottom there, that would make sense. The next fib down is 2236, which is a little bit lower. Now, what's interesting to me is I also use a ratio box for the entire ratio, which I won't get into because I've explained that, but eventually I'll do a video just on ratios, Elliott wave ratios. But the 236 and the 238 2 in white, both are inside of this ratio box. So I favor a price coming down here, which also corresponds, by the way, with the 618 of the entire move, which is a very nice structure for a wave 2 to come down here and tag the 618. But it's not an exact level, it's a zone. So what I'm seeing is a confluence of the prior low is at 25.97. There's a 618 at 25.96. There's a 236 measurement at 25.92. And then, oh, excuse me, the 618 is the top of my ratio box. Excuse me, I misspoke. The 618 is the top of the ratio box. We are nearing 100% of the prior swing low. So we're retracing nearly 100% as of right now. So the point is there's a bunch of confluence here. Guess what? I never talk about this in my videos, but I do loosely keep track of time in terms of how Elliott wave Fibonacci ratios make sense with time as well. So there is a timing ratio line right here. I don't give too much weight to it, but it is something that I put on my charts just to give me some context. So this line comes in tomorrow at exactly 4 p.m. So wouldn't it be interesting if in the next 24 hours, price can cough up one more low down into this region? So now I said I like to track stuff even just for fun. So just for fun, look, we already have the parameters, okay? So your key parameters are on my chart. It's 2806 to the upside, and you can pick one, but I think it's either 2622 or just below 26. Just call it 2590s in the 2590s. Can it extend? Of course, it can do anything it wants. But these are the main parameters, okay, that I want you to focus on. Now I'm going to do what I think is fun, which is I'm already on an 8-minute chart, which is plenty low enough time frame. I'm going to just take a few measurements to, if I were to imagine this is wave 1 of 5, where might this project to? Now, I have my misgivings about this being wave 1 because you could argue it's 3 waves, but you could also argue it's 5 waves. So let's just say it's 5 waves. By the way, I've already given you the parameters, so you have to keep in mind what I'm doing now is a lot less reliable than the parameters I've already given you. But I like to do this because sometimes it does play out. So if this is 5 down for wave 1, and if this is a bounce, yeah, you could view this a couple different ways. I'm not going to talk too much because it'll just turn into a giant word salad. But I'm going to measure this as a wave 2, meaning this could be like some kind of a flat. I'm going to give it the benefit of the doubt. I'm going to put it all the way up here at this top. 27,255. I'm going to drag this over. 27,255. And then I'm going to hop over to my template, and I'm going to select standard pinball. And I can already see that's not going to quite reach to my zone. And on this low of a degree, all I'm doing is looking for some confluences. And I'm going to leave it. Let me move this out of the way. So anything can happen at this scale. Anything can happen at this scale. I'm just playing around. I'm visualizing what may be going on here. This is going to have to extend, but on the micro level, the first place I'm going to adjust my open orders now that this has given me a little bit of structure down here to project from. And I'm projecting from this as if this is a 1, 2. This is really interesting here because there is some structure inside of here. And this is nano madness on an 8-minute chart, trying to measure these waves. It is more beneficial to just keep your eye on these larger white fibs. In fact, let me make these nano fibs purple, just so I don't even confuse myself. So I know exactly what I'm looking at. I mean, there's clearly confluence down here. If this little nano structure wants to extend 300% the size of this wave 2, that would line up perfectly with the very top of this ratio box, and it would line up very near the 2236. Actually, let me see where the 3618 would land. There are certain fib levels that you just are going to get familiar with the more you do this. So the 3618 coincides with the 382. The 300 level coincides with the 2236. My 2236 level coincides with the 200 fib. You see what I'm doing here? I'm looking at the internal structure of what I think is possibly a wave 5, and I'm looking for where are there confluences between the internal structure of the wave 5 and the larger structure for the wave 5. Now, what I just did, let me make these a different color so you can see them. I'm just going to make them yellow just temporarily so you can see the confluences that I've just measured and discovered here. So there is confluences, the 2382 and the 200 fib. And then there's these two confluences down here that I just spoke about. Very interesting. So what my plan is to adjust my open orders to have one open order at the 2382, a slightly larger open order at the 300 fib, and then an even larger order. I'm actually going to put it right in the middle of this zone, 2573. So I'm going to be a buyer. And now I may adjust before I go to bed later tonight. Right now, the market's closed. I may adjust these open orders before I go to bed later to see if there's any other kind of structure, anything that happens in here all the way up into the Asia open, say 9:30 or 10. I'll take another look and adjust my open orders down here if I see anything noteworthy. But for right now, my plan in my long-term account is to add longs here, add slightly longer position here, and then the largest position will be here. And if this whole entire support region breaks, I'm not going to panic, but what I'm going to do is if this whole entire support region breaks, there are always bounces. So I will remeasure things from a larger structure if this whole thing breaks. And I will look for bounces to unwind my long position. Instead of just stopping out, let's say down here, oh, I was wrong. So I stop out and price comes all the way down to some level, which I will measure for if this region does break. And then on a bounce, I will unwind the long. So in other words, reducing the pain. So of course, I'm risking more pain by doing that because what if it just goes down in a straight line, 100 points? Well, my thinking is that that's not going to happen overnight. But what I will do is put in a safety stop dramatically lower just to save my account from disaster. So I'm not going to use the kind of a stop I would use if I'm scalping because I'm building into a swing trade, but I will call it an emergency backstop. And that'll be somewhere dramatically lower. So my orders that I'm going to place overnight are going to be OCO orders with a dramatically wide stop. Okay, so that's my plan. These are the nano structure right here. If it's going to keep coming down, I like these levels. So there you go. I'm going to turn these back to purple just for my own convenience because I use the yellow for ABCs. I try to keep my colors fairly consistent. The white is always the largest structure that I'm sharing and showing on my screen. And then I use the purple for internal structure. And I use the yellow fibs for corrective action ABC, A equals C. And I use the blue for wave 4s. Okay, so there you go. That's the deal. Thanks for watching. I appreciate you guys liking my videos and subscribing. It's especially helpful to you to subscribe if you're liking these silver videos and getting value. You'll get a notification anytime I release a new one. If you need help with support with your trading psychology, or if you're a beginner and you need to understand what the heck is going on, come join the club. Armando, his club is called The Professor Trades. For less than $1 a day, you can join us and learn from a club of over 300 members led by Armando, who is the best scalper I've ever encountered in my life. He's killer. You're going to learn a ton, and then you're getting the Elliott wave, whatever I'm sharing with you guys as a bonus value. All right, thanks for watching. I hope to see you in the room. The link to Armando's club is in the description of this video. Stay tuned for more silver. And remember, when you're trading silver, no matter what, don't get killed. All right, thanks for watching. Bye-bye.